How's it going, everybody? My name is Antonio, and you're about to watch or listen to actually the very first episode of the 2023 Outlook series. This one, I am joined by Lobo Tigre, but what I'm not joined by is your financial advisor. And this is going to be a conversation that's general and impersonal in nature, and one that will include no financial nor professional advice whatsoever. But it's going to include a lot of forward-looking statements, hopes for the future, and a lot of biased opinions. So you shouldn't blindly trust anybody on the internet, and definitely not if they have orange hair like me. And you should always double check those to look for the facts. That all said, Lobo, thank you for investing your time in me and giving me this opportunity.
Happy to be with you. You know, if they decide to go after you, all the disclaimers in the world aren't going to help you. I don't even bother because I figure I'm screwed if they come after me.
I know, but I still feel some type of an obligation towards the viewer because I think that a lot of viewers still don't quite understand that, because that disclaimer is usually very short and it's like, hey, this is not financial advice, but it's still some sort of a financial advice. It ends up being most of the times, and that's why, like, I'm saying this not to, see cover my own ass, I guess, not to protect myself, but sort of to inform the viewer and say, like, hey, this, like, it's not a model. Go, watch an interview and then drop all of your money on one investment. That's just not. That doesn't seem like a winning model. At least it hasn't been for me. So that, I mean, but I get your point there.
At least as a public service announcement, your disclaimers have the virtue of being humorous.
Yeah, at least there's that. At least there's that. And they're memorable, and then somebody might think about it, then eventually like,
That's
okay,
good.
maybe. So yeah. Yeah. Breaks the ice too. There you go. It gives us something to talk about. Uh well, you're actually not here today to talk about that. You may if you want to. You're really here today to, I want to use you for your crystal ball that you have. Um, so why don't we sort of take it all the way from the it's going to be a journey. So I was thinking about, let's say that we're sitting in a helicopter, start with a 30,000-foot view of the global economy. If you want to throw in some geopolitics and start some fires in the comment section down there, that's fine too. And then we're going to move on to the metals and the mining space. But yeah, 30,000-foot view. What is happening in the economy? What are you seeing? What are you paying attention to?
Yeah, well, I got to start by saying that I don't have a breathtakingly original idea that nobody else has brought to you. You heard it first here to share, but in a way that can be a useful thing too. Clearly we've got two, I mean, there's more than two, it's more complicated than that, but a simplified version is we have two major forces going into 2023. We have the global recession, which I don't think is an if, it's probably not even a when, but it's more of a matter of recognizing what's already happening now. This is a major trend that will define 2023. And then you have China's reopening, which, if there are a lot of people that discount that, and I can understand the reason. Well, if you're the factory of the world and the world is in economic recession, how is that good for you? On the other hand, we have experience after the crash of 2008 how it's unfair to say that China single-handedly resurrected the global economy, but it was a huge variable, the Chinese productiveness, and how that came to the rescue of what seemed like an insoluble difficulty at the time, especially from free market types, hard money advocates who didn't think the powers that be could recover from the crash of 2008, the global financial crisis. It's important to remember that they did manage to kick even that can down the road. So I'm not the only one to talk about these two forces. I'm not the only one to even combine these two forces and say, most people are going to tell you, however, that it's going to be on the recession side, it's going to dominate. China's not going to save us. Things are going to suck. Or there's people taking the other side. The recession is mild. China's reopening. It's going to be grand. It's off to the races again. So my contribution here is to sincerely say that nobody knows, not me, not you, not even the mighty Rick Rule or the great Doug Casey. Nobody knows how that's going to pan out. Certainly not Powell and Biden and Lagarde and those types. Nobody knows. Mm. Don't believe anybody that says they do, but be very attentive to these trends. The the quickness with which China has turned around, that caught me by surprise. I didn't think it would happen that quickly. But of course, it's going into the Chinese winter, and that resulted in people self-isolating. Instead of the government locking them down, they locked themselves down. So it's kind of a crazy time. But I do think, I'm trying to be as useful as I can here. And what I'm advising the audience is to watch these trends carefully and see how they balance. And if it starts looking like the China reopening, which will take a few weeks or months, is going to overbalance the recessionary impact of the central bank's tightening, then that will become a very powerful and investable trend. And if it fails to do so, that will become a very powerful investable trend. And particularly for the broader world of commodities, not just the monetary metals, but the bigger world of commodities, and particularly industrial metals, which I know we'll get into later. I can't think of anything more important than to look at this balance.
That's a very, very good point. On China, though, I have seen suggested that the government's basically panicking, is what they're saying, and they're looking for ways to stimulate the economy, cutting the reserve requirement ratio 2 times in a year. The previous time they did that, it turned into some kind of a big issue. So they're saying, the people who I wrote that, I can't remember who made that point, but somebody made a point and it kind of made sense to me. It's like, they're the reason why they're turning around as quickly, just as you just mentioned, the reason they're doing that is because they're very scared and something really bad has already broken within the Chinese economy. That's why they're turning around thus quickly. What do you think there?
Yeah, the media have portrayed it as a response to the protests, but when has the Chinese government ever responded to protests? I mean, look at Tiananmen Square. Why would this be different? Okay, it was not one location; it was more national, and maybe that was more alarming, and maybe it added to it. But I don't know who said that, and I don't know exactly what they said, but I would tend to agree. We had like shocking numbers of export cuts and activity in the Shanghai ports and that sort of thing, like really massive drops. And I would suspect that had a lot more to do with, and it happened to coincide with the protests after the fire and the deaths and all that stuff. But but let me put it this way. And you and I have spoken about this before. I've been saying over the last year that eventually China would have to abandon the zero COVID policy, and it would be because of economics. I mean, you can't be the world's second largest economy and not have an economy and keep locking down your economy. You're going to lose that crown. Whether you want the crown or not, it's not about the comparison. It's about you can't shut down the economy and then be surprised that you have lackluster economic numbers. So I do think push came to shove there. They took it as far as they could, and they probably saw that irreparable harm perhaps would ensue if they didn't change. And here we are.
Where's Chairman Mao when you need him? That's such a bad joke. I shouldn't have said that. But if you looked around,
actually, sorry, let's go back to that. I think that's relevant because there's I remember one time I was flying into, I don't remember what city, I think it was in southern China. I was flying into the town. It's only a town of a couple million in China. That only counts as a town there. And I saw these mountains, and it was an arid climate. It was dry, and they're all terraced. They look like Mexican pyramids, ziggurats or something. But it's not a pyramid. It's entire mountains and entire mountain ranges. It's like, wow. And I asked the person I was with, like, what happened here? And that was one of Mao's projects. They were going to terraform these arid mountains. They were going to terrace them and grow plants to feed the masses. And Mao did this in the wrong environment. They spent who knows how many lives shaping these mountains to grow rice, and there's not enough water. And Mao had this attitude of man is superior to nature, and we're going to just do it. And it failed catastrophically, and a lot of people starved. And those carved up mountainsides are the monument to that catastrophic decision. And eventually, I don't know that Mao would ever admit he was right any more than Xi, or the other way around. But reality does matter. And I think that's an important takeaway. And this isn't just China, this is everybody. You have people denying just blatantly obvious facts on all sides of the political divides, the new Iron Curtain and everything. And our friend Rick Rule likes to say, don't confuse inevitable with imminent. And I guess what I'm saying, though, is that when you see something that is inevitable, you're not wrong. If you're Mao and you're going to try to grow rice in the desert, you are wrong. If you're Xi and you're going to try to lock down your economy forever and hope that somehow people will escape one of the most contagious flu viri that we've seen in 100 years, you're wrong. It's not going to work. And eventually reality asserts itself. In this case, it turned out to be much quicker. And I'm very sorry for the Chinese people and what they've had to go through and what they may yet go through. But in the end, you've got no choice but to go forward.
I'm happy you're bringing up history there, not only because I'm personally interested into it, but also because I was wondering if this seems to be this mentality that what is it, recency bias or something along those lines, that what we're going through right now is the worst thing that's ever happened, and it's just not going to get better, and it's going to keep getting worse and stuff like that. But if you look around in the world and sort of in the past, go back as far as you know history or whatever you're reminded of, 1920s Weimar, whatever, it's brought up a lot. Japan never going back to the levels that it, with the Japanese stock market that it used to be and stuff like that. What are you seeing, or is this reminding you of something? Does this look like something that has happened?
Well, despite the beard, I'm not that old. No, I can't. I could gather wool here and spin some yarn, but no, not really. We are in truly unique times. I mean, the internet has changed many things. It's not relevant to investment, but just the children are growing up now that have the sum total of human knowledge at their fingertips. Like information, data is trivial now almost. Understanding, on the other hand, is rare. And it's funny, you look at ancient Roman scripts and the complaints that the statesmen had about society. It sounds just like what people complaining about young people today. So maybe the takeaway here, the reminder, is that more things change, the more they stay the same, but not entirely. I mean, we do have some things that are different now. And we can't expect things to always stay the way they have. I can bring out my Darth Silver thesis if you want as an example. I'm trying to think of a useful takeaway here, Antonio, and I think I don't have much more to say that hasn't been said. That history doesn't repeat, but it sure does rhyme. I think it is absolutely important for people to look back. But don't get wedded to your thesis. Don't forget that it doesn't repeat. Like, there's so many people that are looking back for our current stagflationary environment, and they're looking to the 70s. And then there's a whole nother camp that's saying, no, it's more like the 40s, including some very smart people like Lynn Alden and others I know that make a comparison to the 40s. Yep. And I think from the macro perspective and the whole global environment, I understand why they make that case. But I also think that one of these things that is different is that in the 40s, there was still at least a remnant of real money. The dollar was still defined in terms of gold. And now it's just a floating abstraction, to use a Randian term. So post 1971, in our context, I'm not just talking philosophy and history, but finance and investments, everything before 1971 and after 1971, in my mind, that is a very important distinguishing characteristic, because before that, you had at least a theoretical tie to real money, to a commodity money, to something in reality. And after that, it became whatever the printing presses or whatever computer traces could make up. And so I'm very cautious about looking back to things that happened before the end of the gold standard or official gold standard for guidance on financial events. For whatever that's worth, take the warning and do with it what you will.
You bringing up gold, and definitely something I wanted to talk about, but it's also maybe worth bringing up in the sense of it being money, I guess, because I think I might. I think I might be starting to lose the gold thesis here, which just means that I never really had a good conviction to begin with on gold. But I'm hearing rumors here and there for the dollar slowly but surely sort of dying. But that's not the first time it's been heard. But it's also a unique situation. It's being said, but it's also a unique situation, as you said, that the dollar might indeed be losing its status as a reserve currency because of this, to use a trendy word here, bifurcation of the market with the new Iron Curtain, and only this time, it's not Stalin and Mao, but it's like Putin and Xi sort of trying to work to Xi, whatever. I mean, whatever, right? But we might be closer to that this time. That's sort of the point here. And so I'm also hearing speculations about a petro gold system, maybe, or a petro yuan system, something, replacing the dollar and going there into its place, where, for example, oil would be exchanged for gold, which is not something that would be weird if you go back enough in history. So did you see gold being used as, more as a currency? Did you see 2023 bringing us a step closer or a step further to that?
I'll address that, but I want to make one thing clear, is that even if you're not a gold bug or have no interest if they're watching your resource talks, they have some interest in commodities, but even if you're not a gold bug, the remark about 1971 and the difference in the financial system, it's not just a gold bug thing. I'm not just saying that because, I love gold or think gold, but I think that was, even if you agree with it, if you think that was a good thing, I think you have to recognize that was a regime change. That was a currency regime change. Up until that time, there was still, at least nominally, this understanding that currencies were backed by something real, physical in the real world. And that is no longer true. And I think that is momentous. It changes everything. It enables all kinds of idiotic things that we've seen since then. And it has little to do with whether or not you want to invest in gold. Right. Now, to your question, it's partly geopolitics, and then it's partly the oil trade, and they're not the same, but they're obviously closely related. I don't want to speak out of two sides of my mouth, but I want to say clearly that there's two broad thoughts to keep in mind. One is absolutely no question in my mind, this is happening. This is real. I mean, we all know that she was just with the Saudis pushing, explicitly for trading oil in yuan. But the other side of this is, it doesn't happen overnight. It may not even be something that happens entirely. Like, being able to trade for oil in yuan doesn't mean that you can't trade it for the dollar. Like a thing where the Saudis, in the way that back in the 70s, they did the deal with the US and officially would only accept dollars for their oil. Right, that's the petrodollar, that they would you had to have dollars to get oil. If they were to do that and say, no, we're not taking dollars anymore, you have to have yuan, that would turn the world upside down. And I don't think that's likely. And that's very different from them saying, yeah, we're still taking dollars, but we're also taking yuan. And maybe we'll take rubles or rupees as well. That's a very different thing, but it does mean that the dollar continues to lose influence. And so I don't see this as an overnight wake up and there's mushroom clouds all over the place, kind of financial mushroom clouds. I see it as a gradual trend that, in my mind, is undeniable. It's happening, and I think the sanctions only encourage that. And even if ends up being like the frog in the hot water kind of thing, if it's a slow and gradual thing, at some point people will realize, you know what, we don't need dollars anymore. We can get oil and other things in the global marketplace. We really don't need to have dollars anymore. And it'll, perhaps like the fall of Rome is, the first sacking by the Vandals was hundreds of years before Rome was basically depopulated. The fall of Rome is not an overnight thing. But at some point you realize that Rome is not what it once was. It's probably never going to be that again. Constantinople became, some centuries later, the main seat of Roman power. So I'd see something like that, where the dollar, you don't just wake up and suddenly, boom, dollar's gone, yuan's in, but more like you wake up suddenly, you realize, oh, I haven't really needed dollars for a long time.
Mm. Hmm. That's what how everything happens. That's what how it happens when with some of my friends too, and then eventually you end up without any friends, which might be at least for me. So it might be a cool story for the dollar too. But then on the side of China, you have them last year for the first time in how many ever years announcing that they've added 32 tons of gold. That's almost $2 billion worth of gold to their reserves last year. They normally don't talk about this until after the fact. They normally don't like sharing it, even though I guess they're supposed to or something along those lines. But they're talking about it now. They're stacking gold now. Russia demanded gold too. Russia was stacking gold before the wars and before the war, and some are speculating that. I was also asking some people about it. Nobody really had an explanation before that, because you saw Russia's gold reserves going up quite significantly before that. But what is happening? Why are these countries stacking gold if there's nothing planned?
Well, there's China and Russia, and then there's also the broader environment of central banks net accumulating gold. And India's doing it. Some of the stans, other countries are accumulating gold. Turkey's doing it, such that we've had net central bank buying of gold for many years. So is it part of the same thing, or is it a separate thing that happens to be coincident? It's easy to tell a story, Antonio, like the Russians accumulated gold before the war because they knew they were going to war and they knew they might get cut off, and they wanted to have hard money as a backing just in case. But we'll never know. I mean, Putin knows, and maybe some people in his inner circle know, but we don't know, the average person out here. And you can convince yourself that you know something because you have a theory that makes sense, but you should never confuse a theory with knowledge. It could just be that Putin likes gold and he felt better having more gold in Russia's reserves, that they were raking in so much money with the oil that while it looks big, Russia's gold reserves are increasing by these, sometimes double-digit percents or whatever, but it's still a small trickle of that oil money that went into gold. And a couple $1 billion of gold for China, that's nothing. That's peanuts for them. That's chump change. As for the overall budget and purview of the PBOC and so on, that's a very small token amount. Now, I'm partial to the idea that China is accumulating much more than they're admitting. They are now the largest gold producer in the world. I remember the shock that people had when China overtook South Africa in gold production. And China is a net importer of gold. So they're both the biggest producer and they're importing gold. And the import numbers have never matched with their official gold reserve increases. So where's all that gold going? Maybe a lot of it's going into private hands, but not all of it, I would think. So again, it's one of these things where it's easy to tell ourselves a story that China is preparing to have gold-backed yuan and have much greater dominance in the global financial world. It makes sense. It fits some of the data points. It could happen. But that doesn't make it true. And I'm not saying it's false. I'm not here to expose the falsehood of this idea. I'm here to say that it's very dangerous to convince yourself that you know something when in fact you think something. And if you make big bets because you think you know something when it's really just an unprovable hypothesis, you open yourself to unhappy investment outcomes. And specifically to these things, these are not new ideas. People have been talking about China and Russia wanting to dethrone the dollar for maybe not decades, but at least the last 10 years. It was something we wrote about back in my Casey days before I became the independent speculator. So we've been kicking these ideas around for a while. The war has kicked them into a higher gear, perhaps. But if you invested in 2015 on the thesis that the dollar was going to go the way to the dodo soon, here we are 6 years later, and it's still the main reserve currency, if not the only one. And And we saw a whole lot of strength in the dollar last year. I mean, you would have been through a world of hurt if you had combined this big idea, dethroning the dollar, with any kind of deadline. And in fact, this is the subject of an article I just wrote under the very boring title of Rationalism versus Empiricism in Securities Analysis. And I did that partly because it was sort of a philosophical point I was making on this very subject about big ideas plus investment deadlines and how dangerous that combination can be. But it was also partly a nod to Graham and Dodd and their securities analysis book. So that's free. Anybody wants to go to the website, check it out. It's a recent article. I actually think, though, it's between holidays, Antonio. Nobody's paying attention. I wrote something quasi-philosophical because I thought it was important. I wanted to get this off my chest. And to my surprise, it's actually garnered quite a bit of attention. And it's interesting that it worked its way into this conversation based on your looking for understanding about these trends in the world. And so I do commend that article to the audience.
Mm-hmm. Fair point. I'm thinking about that you probably just attack like half a FinTwit, because that's what happens when it comes down to geopolitics, because they would take a story and they would try to drive it home no matter what, and make a point, stick to it, and just, choose a hill to die on. And that doesn't necessarily help anybody. It might help to follow like all of them and see all of the views, but then you end up just with like a bunch of noise. And if you're as experienced as I am, which is to say not very much, you end up being confused. Who do you think I should listen to? Like, who do you listen to for geopolitics?
Well, geopolitics. I listen to very few people, and even the ones that I do, I understand that they have a bias. But let me rewind just a moment. I think that there are unscrupulous marketers out there, and I'm not going to point any fingers or say any names, but this phenomenon of this big idea is awesome for a sales pitch. And the beauty of it, and remember, when people use beauty on Wall Street, that means somebody's being screwed. Things a beautiful deal if somebody else loses big time and you win and there's nothing they can do about it. That's a beautiful deal on Wall Street. So the beauty of this philosophical, psychological market phenomenon we're talking about is that if you have some big macro thesis, it's going to take years to play out. You've collected 2-3 years of newsletter subscriptions or brokerage fees or money management fees or whatever it is you're selling. You've got that money and you've spent it. And if a couple years down the road it doesn't work out, oops, sorry, you're already selling some other big idea. Like, you, as a business plan, you can extract a lot of money from people pitching these big ideas that make sense to them. They want to believe them. And the outcome for the investor is not relevant. And by the time it's known, you've already moved on. So I this is personally, it's a pet peeve of mine, and why I try to issue this warning to investors. Beware. So who do I trust? Maybe let me turn around. Basically, just assume bullshit. Assume bullshit from everybody, from me, from you, from everybody. And if you assume bullshit, you'll very rarely be disappointed. You can allow people to surprise you to the upside. And you're much better off if you assume that almost anybody that you talk to about finance, but you absolutely know they have an agenda. There is nobody who's going to talk to you about finance who doesn't have an agenda. And if you're not very clear on what that agenda is and whether or not it coincides with your interests, then you should have, the red flag warnings waving across your head. And, to be fair, I have an agenda. I'm trying to hopefully persuade the audience that I'm a credible and useful source of information, and I'm trying to sell newsletters. Mm-hmm. But I try very hard not to do it on any basis that anybody gets tricked into something or some unprovable hypothesis that'll be years before we find out whether I'm right or I'm wrong. I try to focus on what's happening now, not inevitable, not imminent, but happening now. You may have heard me say that before. And it relates to this very thing that we're talking about. But sorry, I see you want to ask another question, but let me answer the first one quickly. For macro and geo, there's not a lot, but I do like Lyn Alden. I have never felt, I don't always agree with Lyn about everything, but I have never felt my bullshit meter go off. I've never felt that Lyn was ever trying to A, push me or sell me on anything, or B, misdirect or pretend she was right when she was wrong or anything like that. So I have a huge respect for Lynn on the big macro view. And then on the mining stocks, I always give credit to my competitor or former competitor, Brent Cook. He actually inspired me. He was fearless in calling BS on companies and, telling people at a mining conference where the company was a sponsor, telling them that the project was worthless. And that inspired me to create my take service, where I'm very frank in my company evaluations. I don't pull any punches. And I figure if Brent Cook can do that for decades and not get sued into put in jail for doing it, then how can I do less?
I like that. I'm talking to Lynn next week. She's going to be the second one on the series, and I'm talking to Brent Cook's protege, Joe Mazumdar, as well.
Joe. I don't know Joe as well personally. I don't have the relationship there, but he's really running the show. And if Brent trusts him, then by sort of a communicative process, I have to provisionally put Joe in the good egg basket.
Makes sense. I'm a little disappointed though with your answer, because you said you're doing this to sell newsletters. I thought you were here just because you wanted to spend half of your afternoon talking to me. That's fine though. Let's talk about the Fed, because that's something I know you do like talking about, and also rightfully so, because the market still seems to care mostly about what the Fed will do and what they won't do. But here's also the thing. I tend to listen to real podcasts with hosts who ask better questions than me mostly, and I've come to the understanding that the Fed is broke, I guess. And as a private, I guess, for-profit organization, even though their profits end up with Treasury whenever they have them, they're currently failing, as they're not making any money right now. They're actually a loss-making company, if you will, as of the time of speaking, which is early January, by the way. But what does that really mean? Like, that's such a weird concept. Is a central bank, they're not making money, but they should be. I don't quite get it, I guess. So what does it mean? What does it result in?
Well, I didn't write The Creature from Jekyll Island, so I'm not, the most deep knowledge expert on the inner workings of the Fed. But along the lines of what we were just saying, here's an example. This is the sort of thing where we could spin a really great yarn, an exciting story. Coming implosion of the Fed. Subscribe now to find this one tiny stock that you have to be positioned in before the Fed blows up. And that'd be great sales copy. But I think a lot of people will get hurt. But to the point of the Fed, though, that we've heard these kinds of things before. And I remember, back after the crash of 2008, remember the TARP program, and they're buying all these troubled bonds. And people are talking about that sort of thing. It was going to bankrupt the Fed. Everything was going to blow up. And not only did that not happen, not only did the world not fall apart, the house of cards did not come down. But I remember seeing in the ensuing years that some of those troubled assets that the Fed bought, it was able to later liquidate at higher prices. Like, they actually made money on some of those rescue efforts that they put in. I'm not saying that will happen this time. I am not the guy to tell you exactly the details of the Fed's balance sheet and what's going to happen now. All I'm saying is I'm throwing in the experience, the recent, this is an ancient history. This is pretty recent experience that we've had of the Fed doing wild and crazy things and somehow coming through it in the end. So, and a couple days ago, maybe a week or two ago, there was a big headline about how the repo facility hit a new record of 2.5 something or other trillion. For an overnight facility, that seems like a whole lot of money. But did that record mean that something was about to blow up? Here we are a week or two later, and no, nothing's blown up. It was just a bigger number. So it's easy to write a sales pitch about some of these extraordinary things, and I'm not dismissing them all. At some point, something I think's got to give. I do think the Fed is still between a rock and a hard place. Recent numbers of cooling headline inflation and some signs of weakness in the job market have people thinking that, Goldilocks soft landing scenario, that this might actually happen. The opposite of what you're saying is people in the mainstream, most of them are not worried about things blowing up. People are starting to think, oh, well, the Fed may pull this off. All these calls for a recession might be overdone. I don't agree. I think, under the current circumstances with some of these softening numbers, it's hard to stand on that delusional claim that thinking that a soft landing is possible is delusional. But actually, that is still my view. I think that the global economy and the US economies are much more fragile than I think the mainstream is either willing to admit or understands. And it's one of those things where, the signs like seem to be slowly, and then suddenly, boom, you've gone too far. I do think that's likely. I do think it's likely that it's already happened, in the sense that if the Fed paused at their next meeting and did no more rate hikes, the rate hikes already put in place and the pullbacks that you're seeing in the economy. As you and I record this, I don't know when it'll go out. There was a headline out this morning about how the banks are prepping for the recession. Like, the big banks in the US have doubled the amount of money that they have on hand to deal with bad loans. And you see, Goldman Sachs is laying off people. There's clearly the bankers who know what their customers' finances are worried, and they're prepping for a recession. So I think I've wandered off the point here, but the points are, the mainstream actually thinks the Fed may pull it off. They're not worried about the Fed blowing up. Two, I don't know what's under the hood in the Fed, but my perception of the US and global economy is that they, even before the COVID lockdowns and now a war on top of that, they were fragile. And we've had these two massive shocks on a global scale. I don't want to quote The Princess Bride and say inconceivable on the soft landing, but it almost is. I think there's hell to pay, and we're probably going to see it this year.
No soft landing. You're not a friend of the soft landing. You never were. Like, from the day they announced it, you're like, really? And then you kind of became really against it. I'm trying to. I'm kind of like that meme where that guy standing in front of the board and trying to connect the dots, or he has connected dots and trying to explain it. Well, I'm not trying to explain. I'm trying to connect those dots and figure out how to connect into something. And but so interest rates going up, having already gone up, also means higher payments on debts, household debts, but also government debt. And you've helped me understand previously that it's not that, interest rates have gone to 5%, that the payments have gone up as well by as much, because they're dated differently and all that. So I think I kind of get that. But
those are the government payments.
What's that?
Those are the government payments. If you're going for a mortgage, the mortgage payments have gone up directly. I mean, mortgage rates have doubled. So your payments, you can have a higher house payment on a lower price house. Like, the fact that housing prices have gone down. Peter Schiff does a good job reviewing this, better than I can do, I think. And because there's also insurance and lots of owner's costs and things. So your actual monthly cost, you can get a cheaper house and still be paying more money per month, like your outflow per month. Yeah. And that's directly at the footstep of those interest rates. But what you were talking was the government debt. Like, the government debt, there's a huge, massive government debt. It doesn't instantly roll over to 5%. They have all these, notes, bills, bonds, and they roll over at different times. We are, sorry, I don't know where you wanted to go with this, but on that point, we are getting to the point, though, that we've been at higher interest rates long enough that the shorter duration instruments should be rolling over and starting to cause some interesting pain. But I'm not going to make a wild and crazy prediction about it, because I remember people saying that interest rates could not go over 2%, or the United States government would blow up. And guess what? We're twice that, and nothing's really blown up yet. So, beware of these grand predictions.
It's the same thing. Like, these topics are very easy to make grand predictions on, but does that mean that you're not paying attention to ratios like the household debt to GDP, or government debt to GDP? Because again, that's also one thing that it's really high right now, and interest rates are going up. So naturally, you could you could scare people easily using those ratios because they're very easy to understand, and that's what I'm seeing a lot. So do I pay attention to it, or doesn't it matter too much?
Well, those aren't the only alternatives. Clearly, you don't want to ignore the data, but just because something hits a new all-time high, that doesn't mean it therefore must immediately go back down. It could reach an even higher all-time high before it goes down, or it could just fade away, like the repo, that record repo number that we were talking about. It was such an alarming number. It made for headlines, but nothing happened. And there's so many data sets out there. There's so many trends that you could look at. I think one of the most compelling for investments writ large, and I know we'll get into the metals and so on, but just as a general investment precept out there, one of the most compelling charts is one that Jeff Gundlach, the bond king, likes to use, where he compares interest rates to the S&P 500. And those charts almost like one-to-one overlap. And, or I guess it's inverse, because the interest rates go up and the S&P 500 goes down. So maybe it's inverse interest rates in the S&P 500, but I don't have that chart in front of me. Anyway, but the point is, the interest rates go up, stocks are gonna hurt. And so whether you believe in a soft landing or not, whether you're looking for a recession or whether you're looking for more fiscal stimulus, and remember it's not just the Fed. The discretionary budget that Congress just passed in December, the 1.7 trillion, that's not the federal budget. That's just the discretionary part. It's only about 30% of the overall budget. So we're still talking trillions and trillions of dollars pumping out from Washington into the economy. So there's reasons why market bulls can hang their hats on some of these numbers, China reopening, any number of reasons that you can give for being bullish. But that chart that Gundlach shows that over the decades, the rising interest rate environment is bad for stocks. So as investors, I think that's one to really keep in mind. It's a very strong long-term relationship.
I guess I'm also told
this year.
I guess I'm also told to pay attention to the real rates, though, and that's where real interest rates, which is where inflation comes in, and inflation seems to have indeed peaked for the time being, at least. But also looking at where we're at in the economic cycle, if you will, I'm thinking like it has peaked for the time being. But was this the last peak? Like, do we settle significantly lower from here, albeit 3 or 4%, double what we were used to, still lower than what we are at right now? Or do you think that the state of the economy, meaning for, as you said, no soft landing, and for as far as I can tell, we are in a recession that is possibly getting worse, would that mean that we will see more stimulus later on in the cycle, albeit fiscal or monetary stimulus,
yeah,
and that prompts up more inflation and lower real interest rates?
Yeah, that is a crystal ball question, and I resist that. But my sense, for whatever it's worth, is that it probably goes lower, significantly lower, in the months ahead. And then when it goes back up, it doesn't just go back up by itself. It goes back up in response. That significantly lower measured CPI, and remember, a decrease and an increase is not a decrease. If the rate of increase of the loss of purchasing power of your currency decreases, there's a shoulder in the mountain, it's still going up, and you're still losing purchasing power. Your cost of living is still going up. So it's always important to keep that distinction in mind between, peak inflation, meaning rate of increase, and peak cost of living, which basically never happens until you have a total reset. So I think that the rebound in nominal CPI numbers, and you can adjust them or not, make them real or not, but I think that happens after we get a government response, after we get that undeniable recession, and either the Fed pivots or Congress in the US or other countries too, the fiscal response to address the needs of the people who, through no fault of their own, are suffering through the recession. We've established no fault of their own now as excuse to send people direct checks in the mail. And clearly recession is no fault of anybody's own. Nobody voted for those evil politicians. They voted for themselves. So it can't possibly be the people's fault that they elected crooks to steal their money. Sorry, that was harsh, but the piper will be paid eventually.
So fiscal and monetary stimulus after. Okay. Yeah, that's going to end up in a
summary. Sorry, the answer to the question is, no crystal ball, but I suspect that if you look at CPI, core CPI, PCE, these numbers, they will continue coming down early this year until something undeniably breaks and the governments respond. If they don't respond, if there is no fiscal rush and there is no easing from the Fed or the ECB or the others, you could see inflation continue. I don't think we're ever going back to 2%, but you could see it drop back towards below 4 or 3 or something. I would be surprised if it got that far without creating enough pain to force the powers that be to respond with more easy money, though.
I guess it is important to pay attention to how that stimulus will, might enter the economy without too many people noticing, because if it's not stimulus checks, like as direct monetary stimulus, it could be something else. Like we're seeing China being creative. I don't see why not. The West could get creative too, and it'd be like some sort of a fiscal something. I don't really know nor understand that, but I do see that there's an opportunity for them to do it that way. So that makes sense.
There's tons of programs. I mean, you can extend unemployment benefits. There were child tax credits. There are existing child tax credit programs. You just kind of beef them up a little bit. There are a lot of things you can do to support people. And then, of course, politicians love pork barrel spending. We're gonna spend $100 billion building a hydrogen reserve and another quarter of a trillion dollars building hydrogen pumping fueling stations all across the country, and that'll create jobs and all this stuff. It does. The seen and the unseen. You don't know the cost of what that money might have been done if it had been left up to the market as to how to spend it. But the money gets spent, people get jobs, they spend that money. It does have that effect eventually.
It's the ultimate Keynesian utopia, right? They're going to bury the money and pay people to dig it up, and they're going to break the windows of the baker, and then the window maker is going to make money. It's great. It's a great theory. It works. Let's get off the helicopter. I guess it's been a ride so far. Come a little bit lower. We maybe go from the helicopter to the Mount Everest view.
By the way, helicopters don't fly that high. Sorry.
How high do helicopters fly? 30,000 feet, don't they?
No. I think most of them can't get above about 10,000 feet.
Oh, okay.
That's really high for a helicopter.
Okay, I'm just going to trust you on that, but I'm going to look it up anyway.
Sorry, I should have mentioned this before. I don't mean to shoot down your metaphor, but let's take the airplane down. Let's glide down to.
No, sure. I was thinking of getting a little bit lower, which is not too much lower, but still going into the markets and further from the government, which would be one of the biggest markets that you just sort of mentioned a couple of minutes ago. But I want to talk about, I guess, the biggest and the most liquid, possibly the most important market out there, the bond market. I guess 2022 was a weird year statistically. Somebody pointed it out because bonds underperformed stocks in a bear market, which apparently hasn't happened in like 65 years or something along those lines. So does it
worst year for bonds on record?
Does the sell-off in bonds mean anything? And more, let's maybe do it.
It means the Fed was raising rates, right? Bonds and the rate are inverse. If you want rates to go higher, then the prices on the bonds need to go down. That's how you get the yield.
But so a savings account, for me, to give you an example, over here in Belgium, used to pay, I don't know what it points down because who pays attention to savings account, but 0.10% annual interest. And now I'm looking at bonds that pay like 5.5%. I'm like, okay, I put it in a compound annual interest rate calculator, and I'm like, I'm going to be a millionaire by 55 if I keep saving decently on just, it's, a simple bond, 30-year. I'm just going to do it, and, I'm not going to open my computer. It seems attractive, but at the same time, it also seems too easy. And most people who were screaming that bonds are going to go higher were all people who said that were terribly wrong last year. So what happens going forward?
Well, the Fed is talking about pausing, but after it reaches its terminal rate, which is supposedly not yet, the ECB is still talking about steady hikes. So the biggest central banks in the world, well, except for China, are still talking about sending bond prices lower. That's not done yet. You can be forward looking and think about the time where that will bottom and things will turn around. But the central bankers, the people that are driving this right now, are telling you we're not done yet. We still have work to do, as they say. So at the very least, if I wanted to add fixed income to my portfolio, I would wait until I could. I suppose it's on the very short end of the curve, maybe, but then that becomes more speculative. You're thinking more about, which is a funny thing for the independent speculator to say, but I'm speculating on junior mining stocks. I don't want a bond to be speculative. I want a bond to provide a known return for me.
Yeah.
So yeah, I think right now it's definitely a dangerous time to be looking at what happens now with the short term. We don't really know, but at some point, I think I confess, even as a junior mining stock specialist, I've thought about it. I've thought about the fact that I could buy a bond, and I would know what I would get. The problem with that, though, is and that, especially if I was a generalist investor, I can absolutely see the appeal for that. I can see how that poses a challenge for equities when you have all the extra risk in the equities. And why would I take that on when even with inflation, I can know that I get at least this with the bond? That Tina's gone, right? Tara's taken her place, and that makes perfect sense to me. But I'm not a generalist investor. And I do think that inflation will remain stickier, remain higher, not just for longer, but basically permanently higher for practical considerations here, investable timeframes. And therefore, the apparent attractiveness of these bonds is not so attractive. If the scenario we were just talking about a moment ago, Antonio, plays out, where I'm right, the global economy is more fragile than people appreciate, things break, governments panic, as the Bank of England did not so long ago, and they come rushing into the rescue with fiscal or monetary or both types of responses to the trouble, then the inflation rate could easily eat up your supposedly, safe or gains or returns in those bonds. So I do think that there's, and my friend Doug Casey likes to add that there's sovereign risk too, even with the United States. I won't go that far right now, but I'll just say that it's, given my outlook, given my belief, if you want to say, that inflation is going to stay with us and it's going to be a bigger and more persistent problem than the mainstream is hoping, then that undermines the thesis for allocating a lot to bonds. If I can't afford to lose, if I'm not going to speculate on mining stocks and that sort of thing, if I'm a mainstream investor, then absolutely I would be looking to add to my fixed income side of my portfolio. There is no alternative for that now.
Well, I guess that matters how much money you have too, because if you have like $10 or even $100,000, yeah, I guess that's a longer thought. And I'm still kind of upset because you destroyed my metaphor. I did check it though. Helicopters usually hover around 10,000 feet, so you were right too. Some of them can reach 25, but they cannot hover there. So we're gonna change it. We're gonna say we were on Everest looking. Not that we would have seen anything, because
I only know that if I could tell a quick story. I was in Colombia. I was in a chopper on my way to go see an oil field, and we were flying over some really interesting jungle and some villages down there and stuff. And I wanted to see them. And one of the great things about a helicopter is that they're fantastic platforms for photography. You can lean out, you can take pictures down. They can go. They don't have to be moving fast in a forward direction. And even though there's vibration there, the camera is far faster. So they're terrific photography platforms. I loved riding in helicopters. And this guy is flying along at the highest he could go, around 10,000 feet in this chopper. And I'm like, can't we get any closer? You know, why are you flying so high? And he says, it's harder for them to shoot us up this high.
Oh, wow.
So then I said, you know what? You fly as high as you want. That's fine. I don't need to take pictures here.
Well, that's a story. I don't have those kind of stories. I got to give me some of those stories too. It's going to make it for a better podcast. I do want to, so let's say we were in Everest, then we went into helicopter. Before we go underground, we cannot do that right from the helicopter. So let's say that now we have to move from, where do you climb Everest from? Nepal? Let's say that we have to go from Nepal and fly around the globe on your private jet.
The base camp, you can drive up, or you can get to the base camp, and then from there, the serious climb starts.
Okay. My metaphor is destroyed at this point. I'm not even going to use it. But let's say that we're going to fly around the world and take all of what we just talked about, take it sort of into account into the investment attractiveness of different regions across the globe. And let's maybe just go east to west, start as far as possible, as close as possible to China, actually, because we did talk about that already. What I did notice that is very close to China. What I did notice when I was on a conference in London late last year, I noticed that the government of Uzbekistan had a rather large booth in the conference, right at the entrance of the conference too. I don't know if that meant something or not, but and they were always talking to someone, like there were investors lining up to talk to them. The one time that I had a spot to talk to them, my wife wanted to get coffee, so we missed the opportunity. I did not talk to them. She slept on the floor that night, so that's fine. But what do you what do you think about the investment attractiveness of that country? Like Uzbekistan is not opened up yet for investments, I guess. Kazakhstan is, but it's closer to Russia, the new Iron Curtain, something. What do you make of those jurisdictions?
Well, in some of the stands, I'm not going to make any friends saying this, but I'm actually more worried about the kleptocratic nature of the local government than I am the geopolitical alignment. I remember visiting some projects in Kyrgyzstan back before they seized Kumtor, one of the biggest gold mines in the world that the government nationalized. And I met with ministry people. Yeah, we're pro-business, rule of law. This new government is, open arms. We're going to do everything right. And then they had a coup, or not a coup, but the government fell and was replaced, and contracts got torn up, and it was not a stable business environment. And so it was thumbs down for related investments. And then guess what? They nationalized Kumtor. And I didn't know that was coming. I don't think I specifically wrote, for example, they might nationalize Kumtor, but even if I had, it would have been an example. I don't claim to have that crystal ball, but it was completely unsurprising in that place. And I don't know Uzbekistan well. I haven't been there, so I can't make a similar thing. But right now, even if there was a new government, even if they were to somehow invite Centerra back into partial ownership of Kumtor, I would not invest there. It's just too hot. Kazakhstan seems better. It seems more stable. They are making a concerted effort not to be seen as just a Russian vassal state and not to get tarred and smeared with the same brush there. But as a Kazakhi reader, can I say that? Kazakhi reader of mine pointed out, they're caught between the Russian bear and the Chinese dragon, and those are their number 1 and 2 customers for everything, and they can't afford to piss them off. They know where the bread is buttered. They'd like to be open to the world, but there are constraints based on those 2 big neighbors that they have, and that is a risk. I don't personally own anything in Kazakhstan, and I kind of see it as a pity, as there are certainly things there where that are interesting. The businesses look investable. Mongolia is nearby, and that has put a lot of scare into people. And yet some of it seems a little more open. I wouldn't call it exactly stable, but some of the companies there have been able to work, have been able to move ahead. Even Oyu Tolgoi, at the end of the day, hasn't been nationalized. Rio now has bought out Turquoise Hill, and after much wrangling that went through. So I don't know how many countries we can go through on your list there, but regionally speaking, I would take it as on a country by country basis rather than regional, I guess, is my answer. And look at the track record, not what they say, but what they do. And there are some of those countries where you can do business. And you said, ex-China, but I would throw China in there too. And I have an unhappier thing to say there is basically I see China as completely uninvestable right now. And it's not because there aren't great companies there, interesting ones, including in the uranium space that you and I know and love. There's, and I'm not even saying that the companies won't do well within China, but if push comes to shove, if the wrong thing happens, and for political reasons, like the Biden administration just sanctioned the Nicaraguan mining authorities and shook up all the Nicaraguan mining plays. I didn't see that coming. I was already nervous about Nicaragua as it was because of the Ortega. But I could see something like that happening with China. If something happens with Taiwan and things get really hot, I can see where in the same way Americans simply, even if they own Russian stocks, they lost the ability to trade them. They got locked out. I could see that happening with China. I'm not predicting it. I'm saying if that happens, the result is catastrophic. You can look potentially at total loss of invested capital. And even though I'm a speculator, I'm not a wild gambler. That's too much risk for me. So there are other places where I can be wrong. I can lose, the trade can go down on me or whatever. But total loss of capital, being locked out from even an ability to sell the stock, is not likely. So as much as I see China coming out of the lockdowns as being actually a very interesting time to speculate in China, personally, I wouldn't put a dime there.
You're seeing personally, and I'm thinking about people who might. Rick Rule is one of them, and I know who Rick Rule also made a lot of money with, and that's Robert Friedland, and that's also connecting me sort of to the Middle East, because Friedland seems to be turning his eyes to that region too, and most specifically, he was recently giving an annual presentation on something in Saudi Arabia. So is the Middle East getting more interesting for investment, or are you looking over there?
No.
That's easy. Move on.
Yeah, I mean, the kingdom is a kingdom. I mean, ultimately, however things might seem to be going, one man can simply change everything overnight. Interestingly enough, I mean, obviously, oil and all that is that region is you can't ignore that. You can't be completely hands off about it. Well, I guess these days you can say I'm just going to invest in shale plays in North America or something, or oil sand. I mean, you could, but if you're an energy investor, you can't completely ignore the Middle East one way or the other. But as a metals guy, it's interesting that there is more happening in the metals front. And Saudi Arabia has known gold resources, and it seems to be encouraging as part of a diversification away from just oil. It seems to be encouraging that. I could see that being intriguing if I could find something there that was, deeply on sale, pennies on the dollar, because nobody knows anything about Saudi Arabian gold. Possibly. But that would make me very nervous. There's not enough track record there. It's not a top mining jurisdiction. And you know what? If market volatility puts companies in top mining jurisdictions on sale, why do I need to go look somewhere else where I don't have that same level of confidence?
I'm definitely going to ask you what are those top mining jurisdictions more specifically. But I want to keep moving across the map, and Africa is also an interesting jurisdiction. Again, reminded of Robert Friedland and Rick Rule, who made a lot of money there. A lot of controversy around that too. So it's always interesting to talk about it and figure out what might be happening. But I read on Twitter that Chinese might be overstaying their welcome on the continent in Africa, whatever that means. I don't really know what that means, and that it might be an opportunity. They were saying it might be an opportunity because the Chinese are overstaying their welcome, and I don't really know what that means, and if it really means anything, because it was on Twitter after all. But is it what is going on in Africa? Are you paying attention to that region?
Well, of course I do. That's a big can of worms to untangle. First, I got to say, Africa is a continent, not a country, of course, and the countries are very different. Egypt is in Africa. Morocco is in Africa, very different from West Africa, Ghana and surrounding countries there. And then there's Central Africa and South Africa, completely different, vast stretches of different levels of risk. And some of these places, Namibia, which we know and love for the uranium business there, has really been quite stable throughout all of this stuff. It's still Africa, but they don't have coups, they don't nationalize mines, they don't suddenly change the rules. It's been more stable than a lot of Latin American countries. So first, you can't, it's not Africa. You need it, and even the regions, the countries are not all the same. As far as the Chinese overstaying their welcome, I don't think the Chinese were ever welcome when they, in the sense of culturally and how that's perceived. And boy, I'm probably going to get a lot of hate mail here. I have nothing against the Chinese people. But the way those development projects came about and the way that Chinese businesses tend to be run there, let's just say it's not terribly respectful of local culture. And whereas, Glencore is in the news for paying bribes in Africa, and was it the DRC? I forget where, the country in particular. But it's really funny to see the outrage from the country that this company paid bribes to its officials. What about the country? Where's the accountability for them, the politicians who appointed these officials who took these bribes? But anyway, my perception from numerous trips to various countries in Africa is that the Chinese have no problem paying whatever bribes, greasing the skids however is necessary, large gifts to local politicians who suddenly have, Mercedes to drive around the pothole mud street in their village and so on. No problem at all. And they get things done. But if you look at the mine camp for a Western company and a Chinese company, and the Western one will have, a mess hall and an exercise room and some, not just creature comforts, but you're trying to do the best you can to make an inviting workplace and a productive, a happy, healthy, productive workplace in the circumstances. Whereas the Chinese operations tend to be absolute, Spartan minimalist, made out of cargo containers and stuff like that, the minimal for people to be able to live and do their work here. And there's also rumors, let's say, of questionable Chinese backing for illegal mining operations, which are considerably more aggressive with their use of local personnel. And so all I'm saying is, I'm saying a lot here, aren't I? But I guess I'm saying I don't know that the Chinese were ever like welcomed as saviors with open arms, as wonderful people who are so nice to us. They came with a lot of money. They built highways, they built airports, they undertook lots of infrastructure programs, billions of dollars. Whereas the Europeans took over Africa by the gun in previous centuries, the Chinese have been taking over Africa with a checkbook in the 20th century and going on now in the 21st century. It's a more peaceful on the surface, but it is still a form of conquest, if you ask me. And I perceive there to be a great deal of local resentment. There always has been. But at the end of the day, money talks. And you got a lot of poor people who want to feed their families and so on. And I don't see them being given the boot, is what I'm saying.
Hmm. What does that mean for speculation? Because somebody is saying that they are getting the boot, which means more opportunities, I guess, was the conclusion. Does that make sense?
I follow the train of logic. I don't agree. The Chinese are not going away. They're not going to liberate concessions for Western companies that would have otherwise gone to Chinese.
Okay.
I don't think that's likely. On the other hand, there are still concessions available. It's not like the Chinese are taking everything and there's nothing less left for anything else. And for all the technology transfer that has taken place, it's not complete. There are still projects that the Chinese will, they see there's something there, but they don't really have the know-how to develop it. So they'll leave it for another interest that does. And, they're not dumb. They know their limits. They know what they're good at. They know what's cheap. They're not, the Chinese are not going to go in and overpay for what's the African equivalent of moose pasture? Rhino pasture? I don't know.
Yeah. This is a good trivia. We were talking about rhinos and helicopters, a good trivia episode of the podcast. What about, I guess those are the most interesting actually to me, like the Middle East, a little bit further east and Africa. But I also watched a small documentary about Europe and people all of a sudden being shocked, like, oh, we don't have enough sustainable, metals production over here in Europe, and we've just forgotten about it. I don't know how it is in many other places, but like in Belgium, I don't think anybody ever thinks about mining. Definitely not on a monthly basis, let alone weekly or daily basis. So does that bring opportunities, or does Europe remain more in the dark? We're seeing possibly a gold rush in Finland.
Oh, no. Yeah. Finland. The Scandinavian countries are much more sane about mining. They have excellent rule of law. That can mean that processes take longer. Getting your permits in Finland can be long. But, if you're in an area where that's permittable, you're not trying to permit a mine in a nature reserve or something, and you go through the procedure, then actually it's pretty reliable. Finland and Sweden are both highly regarded mining jurisdictions. Denmark, not so much. And, the continental Europe, the realization is happening. People are getting that to have the sustainable future, the green agenda requires mining. There's just no other way around it. And whichever form of batteries and storage and transmissions you favor, it doesn't happen without mining. And that is, I think, ultimately going to be the trump card. And I think we eventually will see more mining in Europe and the US, as much as the current powers that be don't want that to happen. But I don't think that's, that's maybe going towards more the inevitable end of the spectrum. I certainly don't see it as imminent, certainly not in Europe. And even in the US, at least the current administration, they're trying very hard to say, oh, yes, we want more critical minerals. We want to encourage mining, just not here, not in my backyard. So that NIMBY thinking has not given way yet, not significantly. I mean, so I would say it's premature to say, oh, Europe is going to be this big mining boom, so I'm going to buy up all these prospects in Europe before it opens up because I can buy them cheap. Well, but what if it takes 10 years? You can go broke before those assets ever have a chance to blossom. And as an investor, I would be very cautious about any project in an area where the thesis is this will become permittable in the future. If I can't permit it now, forget it.
Good point. And what I noticed last year, and I'm proud of it because it was sort of a personal realization, and doesn't happen too often with me, but if the locals are against it, I mean, take Serbia, for example.
Yes.
It's not going to happen. Maybe eventually, but it's not going to happen.
It's a little surprising in that Serbian case because, if in a country like that, if the government wants it to happen, you might have thought that they could just, tell the people to take a long walk off a short pier and we're going to do it anyway. There are a lot
I
of
think that
countries,
might be a little bit of your
no,
American thinking too.
Well, no, bear in mind, I hang my hat here now, but anyway, that I think is in general true. There's local opposition, well-funded local opposition. We're seeing more and more of that in Latin America, really. And it's becoming almost a veto. Like locals, especially if they're colorful, picturesque locals, they have almost a de facto veto, if not in some places a de jure veto. And if everybody adopts the not in my backyard attitude, push has to come to shove there. At some point, central authorities will have to claw that back and say, no, mineral resources belong to all the people. And it is in the interest of all the people of this country to develop this resource. And sorry, picturesque indigenous people, eminent domain, you got to move. I think that eventually happens, but I don't see it happening now. The current uber woke environment makes that very difficult. Reality has to, I think, cause significantly more pain before the powers that be will see taking actions like that as the less painful path for them.
Mm-hmm. I agree. And there's also a different risk that I am sort of, I guess, a little bit noticing for myself is that, and it's a risk for myself specifically because what I would notice is that there would be a company popping up in the Balkans. There's a specific example of a good company potentially being developed there right now. And there would be all these other companies, popping right next to it, neurology place, I guess, companies that try to be very close to that one company that's going to work. But that's not always the case. And it's sort of known when you look at North America because we have a lot of history about these projects. But when they start popping up in Europe, where we haven't had projects in a while, people like myself might start thinking like, oh, hey, well, this project works, then possibly the project next to it is going to work too. And that assumption is a dangerous one for people like me. That's something
we call that closeology. We call that closeology. Instead of geology, the case for this project is not geology, it's closeology.
Yeah.
The most vivid and egregious example and recently has been the rush into Newfoundland. A company called Newfound Gold made a high-grade gold discovery. And just like everybody, just this land rush of people grabbing, and there it is, moose pasture, grabbing up land, left, right, up, down, nearby, not so nearby, everything in Newfoundland. And you'd see them, if you've got a penny stock and you pick up a project in Newfoundland and the stock rises 5 cents, well, that's a double. You've delivered a 100% gain for your shareholders without adding any value, just by following the flavor of the day trend there. Sorry, I jumped in. I'm not sure what the question was. Personally, I never invest in closeology. I'm not going to invest in, even if I could get in early enough and the stock will double just because it's in Newfoundland or just because it's in the Golden Triangle or just because it's wherever. That's never guaranteed, and it can fizzle. I have never invested on that basis. If somebody says, oh, there's a lot of interest in Newfoundland and there's money coming in, and we have this project that was previously overlooked, it has these drill results, we know there's a deposit here, we have high confidence that there's a deposit here, it's just not been defined according to 43101 standards, so it's flying under the radar. I mean, something like that would catch my attention. It's not just close, but there's also the geology to go with the closeology.
That makes sense. And no, you're answering my question, even though you didn't know I asked it. But that was pretty much it. Because it could be a bias it just could be a dangerous assumption for newer speculators like myself, where you think like, okay, this project works, which ergo means this other project is going to work too. just don't assume that, and still do as much work as you would do if this was the only project in the area, or
Yeah.
potentially more.
Yes.
So
Well, no,
that's
I can be more categorical here. I mean, there's this ergo is never true.
mm,
And even so, there is a saying in the business that the best place to find a mine is next to a mine. And that is true for a number of reasons. There are, like, porphyries tend to come in pulses. They tend to come in clusters. VMS type systems, volcanogenic massive sulfide systems, also tend to form in clusters. Structural deposits, like, if you have something that's in some kind of regional shear zone, a trend, those trends can often be, many kilometers long, that can run through various properties along the way. So that's a valid thesis. But all that gives you is a target. It doesn't mean that there is there. You can have, porphyry pulses here and here, but not here. You can have one that's farther away than your land, and you got nothing in between. There's nothing there. And the same with any of the others. So at the very best, grabbing up, highly prospective ground near XYZ mine, at the very best is tell you is that's a good neighborhood. That is a good place to look. That's a reasonable basis for exploration. It does not in any way, fashion, or form mean that there's something there.
Yeah, no, that's it makes sense. That's something that I sort of had to note for myself. I think those are the most interesting regions for me. What we have left is North, South America, and Australia. I guess this is kind of obvious, but if you had to pick your favorite child, what continent would you go to?
I would actually stick with, if I have to pick favorites, I would stick with North America and Australia. Like, those are primo. Even Scandinavia is tougher for me. I mean, it can move so slowly. And I don't know, it just seems like the geology is more complicated. There's often high-grade sniffs of stuff here and there, and it just seems to take forever to put together a project that can be built, with some rare exceptions. I can think of one very, very rapid pace discovery recently there. See my track record. But actually, I'm not all out of South America or Central America necessarily, but it's become really difficult. We talk about, the veto power that colorful locals have. That's become extremely powerful, even in the most solid pro-mining jurisdictions in the past, like Peru and Chile. That's becoming really, it's moving in the wrong direction. Let's say they're not uninvestable. There are great companies there. There are great projects there. But personally, I would not invest in Peru right now at all until we see what kind of new government shapes up and what its relationship will be with the mining industry. I have not called Chile a no-fly zone necessarily for my money, but it would take a lot to interest me, because it is clearly the current administration is clearly hostile to mining, and they are moving, while understanding that it's important for the economy, they are moving in ways to try to make it more difficult. And that's not a good trend. And those are, to the best mining jurisdictions down there, a lot of them are much, much worse. Mexico is becoming, not South America, not even Central America. Mexico is North America, but it has become more difficult. The current administration is no friend of the extractive industries, and local governments and regulators seem to sometimes go crazy. There are companies having, more than one, companies having problems with the local authorities suddenly not issuing permits or rescinding permits, or deciding that they had a royalty they never told you about on the property, or crazy things like that. So it is a place where we need to be very careful that we pick the right companies in the right places with proven track record of getting things done in those areas, that sort of thing. Now, if you're only going to invest in the, one hand, literally count them on one hand, top mining jurisdictions in the world, clearly you're going to be paying some premium compared to the global average for that. The good news, if you want to look at it that way, as a buyer, as a shopper, is that our markets are so volatile that on some day where gold really, or whatever metal or resource it is, puts a good scare in the market, you can get those same companies 20, 30, 40% off of what they were from recent highs. If there's a big market crash, if there's a 2020 type flash crash or a 2008 style panic, you can get some of these best of the best companies. There's no exploration risk. They've already made the discovery, or, that sort of thing. You can find the babies tossed out the window with the bathwater. So even in those primo mining jurisdictions, if you're disciplined and you set price targets, you set up a compelling value proposition. What would it take for me to see this current market, darling? I'm not going to pay this, but what would it take for me to see this as a good buy? Our crazy markets are volatile enough that if you do that, you may find that you have a shot at those companies at reasonable prices that make it not so crazy to expect large capital gains.
So if you're disciplined, you don't necessarily have to compensate on a good jurisdiction. You just have to, I guess, be disciplined, but also, having done the research before that so that you know what you're buying. Well, that makes sense.
But yes.
So those are the jurisdictions. We went from, I said I'm going to lose the metaphor, but we went to the jurisdictions, and now we should be talking about the metals at this point. Why don't we start off the other way around this time? Why don't I make you pick your favorite child here at first, and then again go from there. Is uranium so your favorite child for 2023?
Yes, it is. We have talked recently enough that this can be a pretty short conversation. My outlook really hasn't changed much. Things are playing out as I thought they might.
Yeah.
Not that I predicted, but as I thought they might. We have seen the dollar weaken. We have seen that boost monetary metals, gold and silver. We still see the recession looming large, not yet really acknowledged. That has kept industrial metals under pressure. And uranium is different. It is an energy metal. I'm not saying it would be completely unscathed by full-blown recession, putting a scare in the market. But unlike the other commodities, it is still below the incentive cost needed to deliver enough supply to the market. We've talked about this before. The secondary supply has been hoovered up. So I'm actually very bullish on gold and silver, particularly the first half of this year, given the differential hawkishness perceived on the central banks. But that's a political thing, right? Things can change. Whereas I'm very bullish on uranium for fundamental reasons. Like, you cannot produce enough of this stuff at current prices to feed the large and growing demand. So whereas some unexpected development on the global stage could change the thesis in the near term or midterm for gold and silver, I think it would take a Chernobyl scale event to change the thesis for uranium. That never say never. It's possible, but that's not likely. And I think it's unlikely enough that I'm quite comfortable investing in that area. And it is the fastest growing portion of my portfolio right now is the uranium stocks.
Especially these last 2 days, I guess. One day wonder that happens too. You were talking about China's reopening earlier, actually, at the beginning of the conversation. You said that that's very important to watch because that's going to determine a lot. I guess a lot of the theses for other energy materials, metals, no, not other energy metals, other energy materials like oil, natural gas, coal, they do depend on the China reopening. It was not too long ago that you told me about those. Has your outlook on any of those changed? Oil, natural gas, coal?
No, quite the same. I still think I'm quite bullish in due course on oil in particular, not coal, probably not natural gas. I mean, maybe still this summer as Europe looks to refill and they're still rerouting their gas infrastructure. But I don't think it's a long-term bet. Whereas oil, I do think it is. I think the industry will continue to be starved from capital by the ESG drive before the replacements have come up to speed to fully replace it. So the irony is still there for me. I think the green agenda sends oil prices higher and will make a lot of money for people buying the right oil companies. But in the immediate term, the China reopening, I think, doesn't really pick up steam until the winter flu season passes, and the recession is already, getting worse now. So there's potential for pain here. So as much as I really like that bullish oil case mid to long term, near term, I'm not buying anything there. So I think that was your question, and rather than ramble on, take it from there.
Okay. No, I'm just making notes. Other energy, you don't like oil, uranium. Okay, that makes sense. Industrial's pretty much the same thesis or close to it, I
Pretty
guess?
much, but maybe a little more bearish, and especially in the near term. I think oil can spin on a dime. If something changes or it turns out that reopening comes to China faster, and it might. By the way, I'm thinking cautiously. I think that it will take time for the reopening to gather steam in China, and particularly, it's a northern hemisphere country. It's winter there. And we have seen all these stories of people self-locking down because they're scared. They've been terrorized by the government for years about this disease. And I'm not saying there's no disease. I'm just saying that there's been a lot of fear inculcated over there, and it's kind of this bizarre side of the lockdowns going away and people staying home anyway. Yeah. So I think it's reasonable to be cautious about the speed of the reopening. On the other hand, there's data coming in from airlines and travel people that they're seeing record bookings. There is a tit for tat with the China and the COVID testing and all that stuff, and they just said that they weren't give visas to people in South Korea and Japan and so on. But basically, we are seeing that there are a lot of people who want to go to China. I don't know if it's just all diaspora wanting to go back because they haven't been able to for years, or what, but we're seeing reports from the travel sector that China is heating up already. So it's possible that I'm wrong. It's possible that I'm being too cautious, and that China's reopening will have a stronger nearer term effect than I'm saying is most likely. But I just, you got to call the odds like you see them. And even with that, my gut, for whatever it's worth, my wolf whiskers are twitching and saying it seems likely that China's reopening will largely happen after people feel comfortable that the flu season is behind us. Things are warming up literally and figuratively at the same time.
The interesting part, though, is that it is highly likely, if not inevitable, that it will eventually happen, and the demand for industrials will come back into the market. And this brings me to a point that someone made on one of my other conversations. I can't remember who it was or who the conversation was with, but somebody said that they would like to invest in commodities that are not dependent on government stimuli, but rather invest in commodities that are going to have an inevitable demand, which sort of reminded me of how you look at this as well. Because if we start looking at battery metals, for example, there's no inevitable demand case for them if you relate it to some of the other metals, some of the other commodities. But there is, strong government wind behind them. So let's talk about that. Battery metals. What do you say there?
Well, in the first place, I don't. I wish it wasn't a strong government wind in the sails of those ships. I wish it was just the market. But the world doesn't ask me what I wish. And the fact is that those, government programs are there, and I think they're not going away. I think, never say never, but those programs are in sync with the zeitgeist. People want these things to happen. Most people are on board to one degree or other with the green agenda. And the politicians know that. And, they are obeying, if you will, the will of the masses in this regard, at least. So I think that's solid. I think that's investable. It's not the same as saying this particular factory here would not exist without this local government giving it a tax exemption and therefore you're subject to the whim of that local government. That's highly specific and may or may not happen. Whereas just the overall drive to electrify vehicles and everything else, I think that's a powerful megatrend that doesn't go away. I'm perfectly comfortable investing and speculating on that basis.
Any
And the
particular
other thing to
metals?
remember is that so-called battery metals, well, in the first place, cars are not the only things batteries go into. In the second place, all of those metals are used for lots of other things. The battery usage is on top of their existing industrial case. Things like nickel and copper are, major industrial staples that, they have a huge global use case regardless of the electrification story. So it's a tailwind, not a prerequisite, even for growth. You could have growth in demand for iron. Iron's not a bad, but copper, nickel, manganese, some of these others, even without the battery story. Lithium, probably not, because the other uses are so small comparison. But even now, the amount of copper and nickel that goes into cars is still a tiny amount of the overall picture. Which brings us back to another important thing, we were talking earlier, I'm more bearish in the near term on the battery metals than I am oil, because that manufacturing, I think, is more sensitive. If you're tightening your belt, you're not going to stop driving to work. You still need to put gas in the car for that. You may not take another trip to grandma's, you might not go to Disneyland with the kids, but you're still going to drive to work. Whereas you might not buy a new car. So you're still going to be using more oil on a daily basis, regardless. Will you be demanding that much more steel, iron, copper, nickel, all these other things for a new car? Maybe not. So I think the industrial metals are more vulnerable in the near term. But to go back to your framing as the battery thesis, I think this is one of those things where it's important for particularly conservatives who object to the green agenda. They don't like it. They don't want to hear about it. They don't want to think about it. They wish it would just go away. It's fine. You can wish that. But as an investor, if your objective is to make money, you shouldn't allow those preferences or prejudices to blind you to the data. And, the data is telling us about some very strong trends here. And, I think you walk away from money on the table if you say, green stuff, I'm not going to invest in this.
No, it's true. Having these biases is definitely doesn't seem healthy. So it makes sense. Are there any obscure commodities that you're paying attention to within that space? I guess it's not too obscure. It's like silicon, I guess, or graphite. Rick doesn't like graphite because he says it's too abundant and stuff like that. But is there anything like very small that nobody's talking about, something that you can tell me?
That's another thing that it makes for great ad copy, right? You have some oddball metal, there's only a little bit of it, and it's essential for this thing, and the use case is growing, and it's going to be great. And we have the one tiny little company that has half the world's supply locked up, right? So rather than give you the little oddball metal that you should all be looking for, it's my professional rain on the parade job here. Say I never speculate on these oddball metals. If by definition, if it's a tiny little niche market, it can be fantastically rewarding if you happen to get it right at a time where the demand blows the price through the roof because the supply just cannot respond. And you can, that's the stuff, forget 10 baggers, that's the stuff 20, 50 baggers are made of, 100 baggers. If you get something right, it's possible. But the risk is commensurate with those gains. But for the very same reason, one big new mine can absolutely flood that market with supply and take the price. It can be like the little old lady in the commercial. I've fallen and I can't get up. It's just down for the count. And you never know when that's going to happen. Maybe an industry professional, somebody who's a trader who sells that metal to the end users, maybe they can figure that out. But it's really difficult for the general investor to ever have that level of confidence. So my view on this is it is possible to make truly exceptional gains picking the right oddball metal or mineral at the right time. It is massively more risky than even the general mining stocks and the juniors. And since I see not inevitable, not imminent, but happening now trends, and I like to think that I'm good enough to pick companies that can deliver the goods into that solid trend. My experience is I can make money doing that more often than not. If I can do that, if I can win more often than fail, then why take the chance on something extreme? Now, maybe if I was 19 years old, had no kids, had no responsibilities, had funny money, and I wanted to just gamble on something that can go 100 times, like Bitcoin or something, maybe I would do that, but it wouldn't be a disciplined speculation. That's not what I do. That's not the focus of my services. That would be a gamble. And that's the way I see all of these oddball commodities. And, you probably get hate mail for that too, Antonio. Somebody's got their favorite little, specialty commodity niche market. That's fine. I'm not saying not to do it. I'm just saying, have your eyes open about the nature of what you're doing.
What is an oddball commodity? Is that like tin? Is that would that classify as an oddball? Or?
Yeah, no, tin is a little more mainstream, but the volumes there. I mean, when you have one or two companies that produce such a large portion of the world supply, which is the case for tin that you bring up. I don't want to name names, but I think tin fans all know who I'm talking about. That adds risk, right? Those are the kinds of markets that can just change very suddenly. One new supplier can just trash the price. One mine that gets flooded or something can make the price soar, which is great for the other companies, but not the mine that got flooded, right? So it's just very risky. But an oddball metal would be, say, titanium.
Okay.
I every few years somebody tries to convince me that titanium is about to go through the roof, and there's just the number of pounds of titanium that are supplied, which is essential for airplanes, and it's already got a very strong use case. But it's such a tiny market that if something did change and the demand went through the roof, the prices would just go insane because the supply could not ramp up quickly to meet that. The problem is I've heard arguments like this, I think, since I started this business almost 20 years ago. I'm not saying every year that titanium was going to be the next flavor of the day, but I'd say, every other year or so, somebody tries to make this case, and it just never seems to happen. So one of these days, some titanium bull out there is going to be right. And, but for now, I'm just not interested. Why take a chance on that when copper is so visibly going into structural supply deficit, absolutely unaddressable without much higher prices, structural supply deficit. I see that as absolutely baked in the cake, super solid trend. I'm not buying any industrial metals ahead of the recession becoming, obvious and undeniable. But after that, I just I hate losing money, Antonio. I lose it when I have to. I can't do what I do without risk. But I'm just not interested in taking chances on things that may or may not ever happen when I can see trends in motion, not just inevitable, not just imminent, but happening now, that I can jump on board and have a very high level confidence of good returns.
I think that makes a lot of sense. Rick always says that there's in every commodity bull cycle, there's someone who's courageous, lucky, and dumb. And that it's easy to replicate being courageous and dumb, but being lucky is not as easy to replicate. And so that's
it's so quotable. That's excellent.
Yeah, no, it's something that sort of stuck with me, but it's true with some of these smaller commodities, I guess. What you just explained also makes sense to me why you like uranium that much, because there's not one company, there's not even one country that can ramp up supply that quickly. It can keep the price higher for a little bit longer than that. I made some notes here, and I'm almost about to let you go here. I guess let's conclude our conversation in a few brief points here, and you tell me if I missed something or if you want to add something to those. Mainly on the macro level, you started by saying that the global recession plus China's reopening are the main topics to pay attention to, and
And to watch the balance.
to watch the balance between those two and what the reopening is going to do to counterbalance the recession, and not to go against it, not to bet against it because of your own biases and thinking like, oh, that's going to happen, or you heard some kind of a big story, which are mostly sales pitches. That's also something that we went through, that you shouldn't let that distract you. That was sort of the first point. When it comes down to gold, that's why I didn't bring up precious metals now, because we sort of touched upon gold before that. The dollar might be slowly dying, but it's not going to go away in a bang. But countries are accumulating gold for some reason, which is unclear, and it is again very clickbaity, and you can let yourself, be sort of lured into believing some grand plan or conspiracy there, but there's nothing clear happening there. No soft landing problems.
Sorry,
are
wait,
more likely.
before we move on from that, yes, all those the big theories about what might be happening with central banks, very interesting to think about. Fine. The investable happening now trend is the relative hawkishness of the central banks and the dollar rolling over. And this is my most forward-looking statement of the interview, Antonio, and I did say it before, but I'll say it again as an encapsulation here, is that I do think the dollar continues to weaken in the first half of 2023, because I think the Fed led the way in tightening. It will lead the way in, if not going easy again, but at least easing up on the brakes. And the market is already responding to that. And you're seeing the dollar retreat, and that has been very good. And as we talk, we're close to $1,900 an ounce in gold, within kissing distance. So I think that supports my thesis that we've spoken about on this.
It also supports your thesis, I guess, kind of stagflation that remains sort of from this. They didn't ask it directly, but from the conversation, it sort of became a little bit of an obvious thing that you think stagflation is still in the works, because you don't believe in a soft landing. You do believe that inflation is going to be lower in the months ahead. You had said significantly lower, but afterwards, when normal people, voters, start feeling the pain, fiscal or monetary stimulus in some sort of a creative way is likely and could bring back inflation to a higher place. So there's a 4-point that I note there. Anything you want to add?
Just that could take a while.
Yeah.
Because the inflation scare is in good. I mean, and voters are screaming about inflation. So for the politicians to do something obviously inflationary, there will have to be louder screaming from some other concern first. So don't expect that reversal right away.
And then because of that inflation, actually, bonds are not as attractive as they may seem to someone who's used to, saving rates of 0.10%, even though they're like 5.5%. Inflation you expect is going to be stickier, which makes the real interest rates remain negative and not as interesting in terms of investing.
Right. And sorry, one other thing, slightly connecting to the previous conversation. Ironically, I think the lower measured by CPI or mismeasured by CPI and PCE inflation numbers will be good for gold and silver, because that means the Fed will ease up and that will affect the dollar. So it's crazy, but in the current central bank driven economic scenario, reduced inflationary pressures have visibly been immediately good for gold and silver. Gold's trading higher on lower inflation prints. That won't last forever, but I think it will last this year.
It actually makes sense now. A year ago, it would not have made any sense to me. But it makes sense to me now, because it is all about the strength of the currencies and in sort of like this game of, who's going to pivot first? if the Fed pivots first, dollars falling, there's a runway for the euro, gold, and other commodities, and then vice versa. Who's gonna, slow it down first? And then there's always these tough guy talks out of I shouldn't say that, out of Christy Lagarde saying, "Oh, we're gonna keep the foot on the gas," and then so that's the only important point. That's what the world is paying attention to. So that's what matters. When it comes on to we sort of went rather quickly, it was rapid fire going through the commodities, so that was no need to summarize that there. Basically, that uranium is still one of your favorite place. The most important thing that I wrote for myself down was that that question that you ask, if not, is it inevitable, is it imminent, but is it investable? So you can have like the matrix of investable and inevitable, and then is it investable and inevitable? Is it only inevitable and imminent? Or is it only imminent, or is it only inevitable? It's all these things, and then eventually conclude to, is it investable? Because that's I wrote down for myself, don't forget that that's the most important thing at the end of the day. And so that's sort of where I concluded my notes.
Well, very good. I think we covered a lot of ground. I think just quick summary, like right now, what I'm buying right now or willing to put money into right now, it's uranium, gold, and silver, only that in the near term. Nearer term, probably more oil at some point when the recession seems to have done its worst. And then as we see how this balance between the reopening and the recession goes, then copper, maybe other industrial metals. So it's sort of like a tail over the course of the year. Not wanting to quote too much Powell here, I do think it is important for investors and speculators to be data dependent this year and not ideological. Ideology is not a good basis for investment.
I'm almost about to let you go here. Last question, I guess. Who do you want to see on this series of the 2023 outlook? Who do you think I should talk to next?
Well, so let's see. Interesting. He's kind of disappeared, but it'd be interesting to see what Eric Sprott has to say now after all the ups and downs. It would be fun. If you can get Doug Casey on, he's always, at the very least, entertaining. But don't underrate Doug. He's a rascal and he likes to throw intellectual firebombs in the audience. I get that. But he's often very insightful, and his guru sense, he sees things coming that I don't know if I'll ever have that guru sense that he has. So he's always interesting. Rick is always, valuable and helpful, but you have him on a lot. And I don't think I've seen you interview Eric or Doug. And
nope.
And by the way, interviewing people doesn't necessarily mean that you have to agree with them. They're just interesting sources of ideas.
Mm-hmm. Yeah, like I agree there. It helps being a billionaire, by the way, to your point. If you don't know if you're ever going to be that kind of a guru. So if you're ever it helps being a billionaire if you want to be a guru. Eric, I'm definitely trying. I need to talk to maybe Rick about putting us in touch. He's not easy to get in touch with. I had the email of his assistant. It was just not as easy. And same for Doug Casey. I haven't been able to, because I've sent emails, but it's not as easy to get through their firewall, I guess. So,
well, Well, that's kind of why I asked, right? It takes. Well, Doug is still fairly. I think Eric has really taken a step back, which is why it would be interesting to see what he has to say now. But good luck with it, brother.
Thanks a lot for. I really appreciate you. Thank you for giving me this opportunity. It's been a while since we had such a a long and a broad discussion, and I've really enjoyed it. It was a good conversation, in my opinion.
All right. Well, thank you. I think we did cover some important ground. I hope you put some timestamps in there because it'll be a long one for the audience to slug through. But hopefully we provided some value. I try to keep it real. I may not have the hottest stock tip to give you ever, but I'm sincerely trying to give you the most useful insights that I can without steering anybody off a cliff.
Yeah, no, I always put the timestamps in there because I go back to these conversations when I'm preparing for future conversations. And by the way, for people watching, there's there's absolutely no reason for you not to be involved in this discussion. As you know, nobody knows anything, and if Lobo got something wrong, or and you know, if I asked something wrongly, you want to add anything to it, please do participate in the comments. I often also use the comments and the section as an inspiration for upcoming discussions. I actually answer all these messages and go into conversations. So by all means, do so. Yeah, that all said, thank you all for being here. Thank you, Lobo, and good luck next year.
Thank you, and good luck to us all this year.